describe a little bit about what you're doing and what you think about the Philippine economy.
Okay, I guess I'm here to discuss the Philippine economic narrative, and there's been quite a lot of talk about that. But I think, well, the doctor, I wouldn't dare disagree with Dr. Villegas. I attended one of his course years back, but I think 7 to 9 would be a bit, should we say, challenging. So, as Hans has said, there's been a very good constructive narrative. There's been considerable, meaningful, and cumulative progress. Many of that homegrown, and so therefore the fundamentals should see the economy through the inevitable moods and swings of the financial markets. But at the same time, too, we think that there could also be good reason for, there should be good reason for some caution, including overheating, including possibly some risks on the inflation side, and also some issues about the sustainability. I think it's really an issue of sustainability. Bottom line, I think that multi-year outlook should be favorable, although it may not be on a straight path. I think the homegrown fundamentals should see the economy through the volatilities in the financial market. And so when I say that growth should be sustainable, it's because growth is becoming more broad-based. You don't only look at the magnitude of growth, but you also look at the nature of growth, and it's becoming more broad-based. It's not only dependent on consumption, which is something that should be obvious given that you have a young, economically active, and growing population, but increasingly too, you're seeing a shift in the dynamics towards greater capital formation, and also possibly the rising exports as the global economic conditions gain more traction. Then you see some lift on exports on exports growth, so that it's becoming more broad-based. You also have a healthy financial system that should be able to efficiently intermediate funds. You also have fundamentally, I think the game changer in terms of the economic narrative is a very solid external payments position, and we think that this will continue to be the story. Then you also have, you have made some headway, perhaps not as much as we want to, but some appreciable headway in terms of improving competitiveness and also in terms of governance. So all of these factors should spell a better medium-term economic outlook, while acknowledging the risks. Indeed, there are risks, but I think we have the policy space, both in the monetary front as well as in the fiscal front, to overcome these challenges and then sustain growth. So growth, hopefully, that will be more inclusive, because after all, that is only the growth, the type of growth that really matters.
Very good. Well, maybe, yeah, we'll have our panelists, since we've heard good stories from Hans and Joy. So Martin, perhaps, would you, maybe for everybody, because not everyone knows the kind of work that you're focused on and do and have done in the past, can you tell us a little bit about yourself?
Well, thank you, Richard. I started as a venture capitalist. I'm not a geek or a engineer like my old friend Paco Sandeas is here, but it just so happened that I started with H&Q, which is a U.S.-Asia cross-border venture capital firm. And then I did Walden International, which is a very similar outfit. However, I did make the shift today. I now am part of Fortman Klein. Fortman Klein is a global boutique investment bank. Did a lot of deals. I think the bank was the advisor to San Miguel in transforming it from a beer company into what it is today. We also advised Injap Shah in Mang Inasal sale to Jollibee. So the shift I made can be attributed to, I don't think technology is the lone driver of growth. If you look at the economy today, fast-moving consumer goods, tourism, consumption, education. So we are setting up a private equity fund that hopefully would represent the various drivers of growth of the Philippine economy. And I think this afternoon's panel, you're going to hear from the experts on the techs, the incubators. But I just feel that today there are other drivers of growth that I think will propel the economy and I think can be sustained.
Okay, very good. Martin Pascual, I know he's high-powered in the pharmaceutical industry as well, and I didn't know that he was prominent also in the capital market side.
Yes. My background is from corporate litigation. I I practiced for several years with a large corporate law firm in the U.S. and recently came back about 5 years ago. So I'm also a returnee. But I've made the switch from corporate litigation to the pharmaceutical sector, as well as some of this, a lot of the entrepreneurship, digital entrepreneurship, which is currently growing a lot in the Philippines. With regards to our main business, which is pharmaceuticals, despite the good macro environment, we always try to really try to execute on a very basic level, regardless of what's happening at the macro level. I mean, you do have a good GDP growth, 6-7%, but pharmaceutical market's actually growing 2 to 3%. So for us, it's really a focus on execution. At the same time, we're trying to also look at new opportunities, and I think there's a lot of very good concrete opportunities in the Philippines, regardless of a lot of the risks, which I think common in a lot of the emerging markets. But just to build off of what Joey Ortega said, below the conglomerates, below the large corporations, there's a lot of opportunities for family corporations that are professionalizing. And that's where I think you're going to hit your sweet spot for a lot of venture capital firms, a lot of private equity firms, and also at the very seed capital angel investing. So in terms of opportunities, these will continue, I think, despite whatever sort of macro environment you will have, because you do see a very growing trend in all sectors of businesses really trying to professionalize and scale.
Very good. And next, Nick Ashby,
Yeah,
of
hello.
Sullivan Capital.
Can you hear me? Yes, I come from a background of originally equity research and capital markets, and then I established my own business in corporate finance and M&A, and I particularly specialize in, at least on the capital raising side, of venture capital and private equity. So my business as it is at the moment, which is based in Kuala Lumpur, Malaysia, is to help companies raise capital from the private equity and VC markets, and I have an emphasis towards the healthcare and biotech and clean tech sectors. And on the buy side, I'm engaged with helping funds to locate investments all around the Asia-Pacific region. And I have one particular client who has asked me to put more emphasis on the Philippines because recently they've decided that it is a much more acceptable and agreeable market in which to invest. And I think that goes back to some of the earlier comments that have been made. Yes, we're seeing faster economic growth than we've seen in many, many years in the Philippines. The figures are all looking very good at the moment. And we've spoken a lot about the quoted capital markets, but that's not really my domain. My domain is the unquoted markets. And this is particularly interesting because I'm seeing what I'm seeing in the Philippines at the moment, as well as robust, solid economic growth, a rise in FDI, a rise in capital in the value of the stock market obviously creates its own newfound wealth. As Martin just said, we're seeing a structural change in the Philippines economy. You're seeing more returnees from the likes of the US with qualifications and experience and contacts and capital to dedicate to new ventures here. Because it is an emerging market, there are all sorts of business opportunities that don't exist in developed markets. I've seen the same thing in India several years ago, and I think there are quite a lot of parallels to be drawn here. You've got a very robust remittance industry which is going to continue to grow. I think with the rise of the BPO industry is quoted as being the biggest driver for the property market, or the commercial property market in this region, is a continued growth industry and seems to be in quite robust health, which is very good to see. And as Martin said, there's a lot of new ventures, there are new sources of capital that didn't exist a couple of years ago, particularly in the venture and earlier stage investment space and growth capital. So there are opportunities now rising for that money to be invested. There's been more capital than opportunities to invest in recently, but I'm seeing now more and more opportunities coming up now available. And that itself is just it creates jobs, it creates wealth, it creates profit, and it becomes, should we say, a virtuous circle. So those are just a few of the insights. I think there's this structural change. I think Philippines standing in the investment world is becoming more prominent and more accepted, and that's filtering through to more investment in infrastructure and a lot of other larger scale projects. So it's all generally very positive. What I've appreciated about Philippines as an economy is how stable it has been relative to many other Asian countries.
Very good. And now Paco Sandihas, who I know for years over has been telling me how smart he is and all of that. So I know I am interested to hear a bit more details though, because there's one thing he starts companies up when they're small, so you don't hear about him as much, and he lets other guys then take him to the next stage. But Paco, can you tell us your story so we can really understand? So I'm sure there's a lot of people who'd like to meet you once they know what you do.
Yeah, I'm Paco Sandihas. I founded Nara Venture Capital in 2002. But when Martin said I'm old, I guess he's referring maybe to age. We've been doing venture capital for almost 20 years now. And that's when it wasn't really a popular practice here in the Philippines. And it was one of the first also in Asia. Hambrick and Quist brought the venture capital practice to Taiwan and the Philippines in the mid-80s. I joined in 1997. 2001, we started, I left and started Nara. Nara started initially as what I was used to in the US, which was seed venture capital, early stage venture capital in many semiconductor companies. And my background was in semiconductors. Coming to the Philippines, it was harder to do semiconductors since most of our semiconductor practice here was simply packaging, of which we do still have one company here that does chip packaging, PSI Technologies, a partnership of Nara with the Ayala Group through IMI. But more and more, it's obvious from what Martin's saying, the Philippines is more suited for the software industry where we can participate in the mobile cloud space and start with your own little Instagram, your own little WhatsApp, hopefully, from the Philippines. That's the ambition. But one of the things I've learned, there's so many good things that have already been said. That's the problem with the big panel. All the good things have been said. But one thing I would add is that in my experience of almost 20 years, trying to make money in innovative companies, the good ideas are easy. There's so many smart people here, whether you're a local professional or you have the experienced people coming from, returning from Hong Kong or the US. The good ideas are many. The hard part is operating and making the company successful. And for that, you really need teams. You need good professionals who are hardworking, experienced, and who would never say, I give up. I'll stop there. There's so many good people here, so.
There's a lot of smart ones. But it's interesting what Martin said about returnees, and if you notice that roughly half of our fellas here are returnees. And it is interesting, we're attracting a lot of very high quality people, in addition to keeping, which is also very important, the high quality ones that are already here. On the Philippine economy, people are positive about it and so forth, but what does anybody think about that might be risks ahead for the next 3 to 5 years? Anybody want to take a stab at that one, given that we're all very positive in any case, but anyone?
So I'll start. Richard said that we also have to introduce ourselves by way of what we're doing. I guess I can say that we're at the central bank, we're paid to worry. So we're paid and trained to worry. So we look at the story, we look at how sound it is, but we also are very mindful of the risk, particularly the underappreciated risk. So one issue everyone talked about it is the growth rate of 7%, 6 to 7% sustainable. Then you look at how rigorous the estimation of potential output growth is. and you look at how what's happening to labor market dynamics, what's happening to capital formation, not only capital formation, the broadening of capital, but how effectively the economy has been able to use this capital. You also look at some estimates of total factor productivity, and you're seeing that it's increasing. And why should it be increasing? You ask yourself, and then it's because the institutions have been improving, the policy framework, the policy environment has also been improving, and this has caused a growth to ramp up considerably. Then you also, of course, have heard about the demographic dynamics, the sweet spot of demographic dynamics. But obviously, you can leverage on a bigger population only if you create the jobs. So the challenge really is jobs, jobs, and more jobs. So on the issue of overheating, I don't think not yet, not at this growth rate of 5 to 7%. I think the economy has fundamentally shifted to a higher gear. It's running on on all engines. Then there's also the issue of potential formation of asset price misalignments, potential formation of bubbliness or frothy behavior in certain segments of the asset market. Obviously, the obvious choice would be the property market. And here we also think that there seems to be an organic, a structural story behind the trends in the property market. And so while we are monitoring vigilantly what's happening in the real estate market, we are not unduly alarmed. After all, if the central bank will do indeed start to water down the punch bowl, then the question is, perhaps some of you guys or the bigger part of the population hasn't really drink from the punch bowl. I'm talking about the social inclusion objectives of government. So you have to be very carefully targeting by way of macroprudential measures. When you do start to water down the punch bowl, you can have when you have a hammer in hand, you seem to look at everything as a nail. And so you have to be circumspect. You have to know if it's fundamentally driven, if there really supply and demand dynamics. What's happening to leverage? After all, it's when sentiments turn, it's not really how much liquid the market is, but really how exposed it is in terms of leverage, the refinancing risk, if you will. So just to say that the story looks very favorable, but at the same time, we acknowledge we are quite mindful of the risks.
Very good. She's a sharp one, isn't she? Spent her whole career in the PSP. Yes, really good. When I was down there's all kinds of people like that walking around and doing things. So really, it's a high-quality organization, BSP. You know, sometimes some people say things about certain organizations, but they don't say it about, well, they do. They say things, but they're all good things about this group. Anybody else? Nancy Cat?
Maybe I'll add to that. I think that when we look at the risk, and putting the macro hat on, the short-term risks are really, well, what we're focused right now is whether or not, for example, the government is spending enough on infrastructure. There's been a lot of talk. You can only fuel this growth or these growth rates if, in fact, there's enough money going into essential infrastructure, you know, the usual things, roads, airports. And in fact, the one issue that probably worries us when we talk about risk is there enough of the correct type of investment in the power sector? You know, we've now seen where the supply and demand curve have basically met, and there's a curve that we saw about 3-4 years ago saying 2014, maybe end of 2013 would be the year that you have that equilibrium. So when people talk about why are there shortages right now, why are there issues in the power sector, to me it's almost a little bit, I'm a bit perplexed, especially when some of the policymakers tend to then refocus by blaming specific players as opposed to saying, look, we knew this was coming, yet maybe the investment environment as well as the rules of the game were not clear enough 2-3 years ago, and only now are we catching up. So one item is that, you know, historically I think we've been spending something like, 2% of GDP for infrastructure. I think the conventional wisdom, you have to spend a little bit more than that, maybe 4 or 5%, to actually have even a sustained level of growth. And so there's actually perhaps the short-term risk for the Philippines at one level. I would argue that on the medium-term risk, what we would like to continue seeing is I think the right investment in the educational sector. And clearly this is obviously linked to the fact that our workers, when we talk about this population growing up and entering that period wherein they're productive, they obviously need to be workers that have been trained at least to a specific level. So what we're doing in our grade schools, what we're doing in our high schools, and perhaps what we're doing in the third level, tertiary level of education is going to be important for the success of the Philippines, say, past the next 3 to 5 years.
Very good. Maybe we'll go to a question. Martin, you have a, yeah, okay. Oh, Paco Sandijas, he's ready to,
I think, so many people to talk, but I just have to say this. Martin and I are in a foundation called Philippine Development Foundation. And there we take a very long-term view. We're about money here, and so just a lot of you want to make quick, short-term money. You can. You launch into the BPO, and sure, while we're cost-effective at this point, sure, the Filipinos will take the phone calls of any complaining American, right? No problem. But is that really what we want to be as a country? It's not. That's where what Hans is saying. We got to focus on education. We want a modern Philippines where we compete. We don't just buy cell phones from Korea and China, just buy the cheapest junk we can get from anywhere else, but we never make it. We're always just servicing the rest. That is not what this country is about. At least it shouldn't be. So the risk is that the government and all of us as businessmen have to take a long-term view and invest. It has to be in that education. And then one of the things I was talking to my fellow high school mate there, I'm a soccer player, and so sorry to the basketball players, but we're in a football field and all of us want to win, right? But it's a game. We want to make money and win. But for the foreigners who do private equity or venture capital, you come here to the Philippines and you think, oh, that looks really nice, trees and grass and football players, so let's go play. I want to play this game and win because there's a lot of games now. Football is booming in the Philippines. But when you get to the provinces and you play the game, you realize, whoa, this field actually looks green from afar, but it's full of potholes, it's got rocks, the referees are crooked, they're gonna, you know, it was all talked about earlier in the other private equity fund by Joey, right? The rules of the game here can be twisted, but it's being fixed, but we all have to work together to fix those rules because that's the way that the long-term investors will stay here and keep investing. Otherwise, if we don't fix those things, short-term money, make a few $1 million, $100 million, and then you leave. So in PhilDev, we need to focus on education, and then it's the entrepreneurs. We need to invest in the entrepreneurs because they're the ones who create the new companies that will make the Philippines a modern economy. So with that, I know there's so many things we can continue to say. You did ask me to talk about NARA a little bit. So NARA, we focus on that. We invest. It's not all about cell phones and applications. We got to invest in improving education, try and make it more efficient, get to the poorest of the poor. So we're working with the Department of Education, the Department of Science and Technology, to make education affordable and something that anyone can get. And then same with transportation and all that. But that's not something that our group does, transportation, but I'm sure the others here might be able to invest profitably in those kinds of industries.
yeah, there's so much to talk about. Let me go to a question here. And I wish we had more time because these are interesting. You can tell a lot of good information to share. So please, question.
Sorry, it's me again. I asked the question earlier. Konting makuli ako. But first of all, I'd like to make one very small comment. It is interesting about the gender bias on the panels and the speakers today, that we only have this one lovely lady from the Bangko Sentral to speak to us today. So that's a little bit of an interesting observation of the sector here in the Philippines. My real question, though, was I was at a forum the other day, a different forum, with Mrs. Lucita Reyes, Governor of the Board of Investment, and she was talking about the consolidation, amalgamation, and streamlining of the various incentives, etc., that are currently embodied in various laws here in the Philippines. And it provokes me to ask the question of the panel, how important, particularly with an eye on the ASEAN integration process at the moment, how important in investing decisions for FDI are government incentives such as those offered by the BOI?
Who would like to answer that one? Oh, Paco, okay.
They're useful, but the tax incentives, if you're you're talking about young companies or established big companies like Intel and the rest? Well, it matters for me because I said I invest in early stage companies which lose money. So give me an income tax break, doesn't make sense. I'm losing money anyway, right? But what PEZA does, and Philippine Economic Zone Authority, if you talk about Lilia de Lima, she's another hero, like the BSP here, they're heroes. I think PEZA is a hero. That's a very efficient government agency, and they really make the working in the Philippines much more fun, I guess, if you're looking for words. It's not really that much fun, but it's less painful than in the other agencies. BOI is actually trying. I think they're working. But in terms of just tax breaks, you're all multinationals. You can find cost-effective ways to minimize tax and bring it somewhere else if you want. So it isn't too much in terms of just that portion for the early stage companies we're at. Now for later stage, yes, it makes a few points of a difference.
Anyone else? It's a difficult question. Oh, and CCAT?
We talk about this a lot in terms of relative competitiveness. So I think the answer is that they could be important, but they're probably not as important as other issues like ease of doing business, number one, and I would say number two, consistency of application of rules and law. Because at the end of the day, as Paco was mentioning, you know, tax incentives, while helpful in either specific industries, specific situations, again, it's a kind of like an adjustment that you can make, and I guess with enough structuring, you can actually get to the same thing. But over time, the reputation of a place, the Philippines in this case, in terms of the ability to continuously attract and retain investors in this country is not going to be measured by the 3-year tax break that you have as a standalone. It's going to be measured by how you've been able to actually work with relative ease here, and you would compare to other locations that you are in. And you might say the credibility of the place, whether that's the government, local government unit, the national government unit. So again, I would echo the fact that when you have highly professional organizations like the PEZA, it's a great example that things can get done here correctly. And in the financial sector, you know, very professional management by the Bangko Sentral. Again, they're at a level that I would argue we'd be very proud of when we compare to not just other emerging markets, but other, in fact, interestingly enough, I would say some of the other developed markets that we deal with.
Very good.
If I could just say something very briefly. One should never make an investment decision based on the availability of any incentive. That's a fundamental rule that applies the world over. If the Philippine government or various agencies are offering tax incentives, and that's obviously a very positive signal that their mind is in the right place, and they will be that they are going to be very supportive of the investment project. But basically the important thing more than anything else is the ease at which the project can itself be implemented, irrespective of those tax incentives. That's absolutely critical. That all the agencies required to give all the permits are there and are going to act in good time and make sure that project happens in a timely manner. So if all of those other things work, then it becomes an attractive environment in which to invest. And if they don't work, then it's not. And I think the important thing that all the agencies in the Philippines and the government need to be aware of is that investors from the outside of the country have the whole world to choose from as a destination for investment. So Philippines is one of many choices, and it's very important that the mindset of the regulators and the authorities here is very focused on making the Philippines a destination of choice.
Very good. Maybe Joey hasn't spoken. I'm interested to hear his impressions on the general, permitting and other things, because he's been outside the Philippines for some time, so he has kind of a fresh perspective on things. How would you say things are going? Because you're getting reacquainted with Philippines and the governments over. What kind of a comment can you make about that?
In my past 6 months, I could see there's a lot of improvement, change in the mindset in the Filipinos, where in the past they used to be too clannish, too close family. They only deal with people in their networks. So now we are more open-minded, thanks to all of these initiatives brought in by different foreign entities, foreign investors. So I think that we are on our way up. And as I said earlier, we've been on the top of Asia before with Japan. So I think we're just going back to where we were. So I think what's important is the passion of all of us who came back from overseas to bring back all that we know, our networks, our contacts, to be able to grow the Philippines to where it really belongs, on top of Asia.
Good story, yes. Very nice. We have a question right here in the middle. Please state your name, my dear.
I'm Emma Imperial, of Imperial Homes Corporation. I'm a developer, and I'd like to, speaking of fixing the rules, as Paco Sandez said, I'd like to address this to Mr. Hans Sikat and Ms. Amador, because I'm one of the proponent of solar development in our country. I'm very active, partnering with Infinity Group and some Danish company in Denmark, to be able to make the Philippines as the solar capital of the world. Maybe it's not so many of you know that the country has one of the highest irradiation in Asia. So it's really different from Europe and other countries where the sun is not always there all year round. So I thought of putting solar panel, small solar panels 3 years ago, and even at that time it was costly, but solar now is getting cheaper. And yet, talking about fixing the rules, I don't know what's happening to the Clark, which is the city of Green City. I mean, it's still not flying. And then also, some of the other government agencies are still not fixing the rules. And therefore, listening to Mr. Hans Sikat and Ms. Amador gives me a lot of hope that through your leadership, this fixing the rules will enable this solar, boom in our country. And I would like to I'm trying to push this on mass housing and affordable housing, because in many islands in the Philippines, if we push this, it's going to be sustainable, because the electricity is very expensive, especially in the provinces. So, Mr. Hans Sikat and Ms. Amador, maybe you can answer these questions, fixing the rules.
So thank you very much for the question. I'll take first stab at it. Well, I'll give a non-sexy answer. A central bank must not overstretch. A central bank shouldn't overburden itself with responsibilities that are outside its remit. We did that. In the past, we went into development financing, and we paid for it. As you know, the central bank had to be restructured in 1993. But I think insofar as, on a very parochial note, insofar as the central bank is concerned, as long as we are able to create a predictable macroeconomic environment, as long as we're able to promise macroeconomic stability, to be a beacon of stability, at least insofar as the macroeconomic sector is concerned, then I think that should allow firms like your firms to prosper, not only for the short term, but really over the long haul, and on an even keel. So you can absorb the shocks when they do come, and they will inevitably come. But then, if you have a predictable environment, if you know what's happening to inflation, if you know that exchange rate flexibility will allow markets to adjust better to the gyrations in the markets, if you know that prices will reflect the intrinsic, the inherent soundness of the economy, then that should create conducive a conducive environment for business to prosper?
Well, I can't really speak to your sector directly, but I think I'd like to talk about what we're trying to do in the stock market and the capital markets to try and demonstrate that there are rules, and we're structurally, I guess, very different from what it was before. I did not put it in my presentation, but maybe one of the things that we like to talk about is actually good corporate governance. And obviously that means at the most basic level, following the rules, having a set of clear, transparent rules there for the market, and expecting everybody from investors to issuers to broker-dealers to basically fall under that gamut. And within that, I think, let's say the big fence, you can do what is allowed, but once you pass that fence, you will be cited, and basically you will be, I guess, fined or punished for it. So I'd like to say that at the stock exchange, not only have we tried to be very consistent with trying to apply rules and regulations outside of simplifying them. I think there's been a lot of examples over the last 2 or 3 years. And what's actually happening is that we have our own good governance program that rewards outstanding corporate citizens as well as broker-dealers on an annual basis. And we're hoping that these annual awards will basically end up being what we call a good governance board, wherein these issuers, these companies, will basically be the examples for the rest of us in terms of those who exceed corporate governance standards at the Philippine Stock Exchange. Now, maybe an interesting tidbit. Over the last 2-3 years, there has been a move to actually improve good governance standards across ASEAN, and there's now something called the ASEAN Scorecard. I think we were pleasantly surprised we're also a listed company, that the Philippine Stock Exchange was actually ranked in ASEAN for 2013 as one of the top 30 companies that practice good governance. So I would say that it's very different from the old boys network that was I guess, the perception of what the local exchange should be. But more importantly, it's a role that we take seriously, and we hope that others, in fact, follow this lead. And again, interestingly enough, if we take a look at the third-party accolades, one of the reasons that the Philippine Stock Exchange was named the best stock exchange in Southeast Asia for 2013 by one of the institutional investor magazines was basically our track record in improving corporate governance. So we hope that this, at least in our own real sector in the capital markets, we hope this actually grows. And with the example that we set, we hope that's also infectious in terms of other corporations actually practicing what we preach.
Absolutely. Joy, Joy, 1 second though, but if I just reiterate, for some that are, have concerns about government or quasi-government organizations, I just repeat Hans's list, because I remember him going through, ETFs, he's having some problems with that, and then the new trading platform and different things, and there was challenges in each one and concerns, and all of the check marks are now there, and they keep doing these things. So it's a very impressive job that they're doing. So sorry, okay, Joey, go ahead.
I have a comment for the lady regarding solar energy. Our company is into funding of solar projects, hydro, wind, so let's have coffee. Thanks.
Very good. Yes, Emma's got a big operation down there. So please, another question right here. Oh, Naresh?
Yeah.
Please.
Good morning. My name is Naresh from Sun Life, but this question is a personal question, and this is directed for Hans. That was a great presentation, and I think every slide had so much of power for Philippine in it. But there is one aspect that continues to be a weak spot, that is the retail and domestic participation in the capital markets. So I've been living here for the last 6 years, and every time I listen to your presentation, it seems to be always, if I'm not mistaken, 500,000 or something like that is the number of investment accounts that we have in our equity markets. I also would like to expand this question. So what is it that we are doing to improve the retail participation in the capital market? And especially from the regulator, I would like to know how the government is helping the industry to come up with the right incentives so that we can support the retail to participate more actively into the capital market. I think this area continues to be weak for a long, long time. I think Philippines has the lowest level of retail participation. We continue to depend upon foreign money flows to support our market. So how do we think we are going to address that? Thank you.
Hi, Naresh. We've been listening. So, now thanks for the question. Very important question, in fact. And I would say that we are trying to do a number of things across the board to actually improve that number. By the way, I think as of last count, it was over 100,000 more than when you last heard it. So it's over 620,000, if I have the number correctly. So I hope that's correct. But in any case, it's still a very low number. When we think, for example, that the typical market for Philippines, we could actually reach at least 5 million Filipinos which have a minimum checking and savings account balance. So the first item, which is really, I think, quite powerful, is this fact that we have now launched this online service a private label system that some of our broker-dealers have signed up for. Only 2 are up and running right now. There's obviously one leader, COL Financial, in the space, but their growth rates over the last 2-3 years of about 40 to 50% per annum in terms of new sign-ups just demonstrate that this market is really ripe for the taking. And of course, you have a very engaged population who can work off their smartphones or tablets or computers. So clearly, we are not tapping enough of them as quickly as we can. One of the programs that I think we need to do a little bit more, we talked about it before, but in terms of actually gaining traction in conjunction with our market education programs, is actually working with the BPO industry and the banking industry. The BPO industry simply because you have a lot of employed young kids who are obviously not scared of using their devices and would have a checking account at the very least and would therefore be hopefully easier to deal with in terms of setting up a securities account or basic security savings account. The challenge we find, and this might go into Sid's area, when we talk to the Bankers Association about cross-selling products directly through the branch banking system, which I think would be in the same way that insurance products should be very easily cross-sold across different platforms, is that we find that there's a pushback from the bankers, mainly because of the perceived risk of equities, or the fact that their regulators, which is in this case the Bangko Sentral, thinks that such a direct type of marketing is probably a very risky proposition relative to the view that a bank effectively has a savings perhaps goal and principal protection goal. So I'll stop there and maybe pass on the mic.
I particularly like the question about retail investing. Just for some bit of information, we're very proud at the Bangko Sentral. We have this consumer finance survey, and do you know that, well, this was done in 2010, but do you know that only 2 out of 10 households hold any type of deposits? And do you know that only about 0.2% of households have any type of investment in hands part of the world? So only from where I sit, so if there's a correction in the equities market, then that shouldn't lead to any significant wealth destruction, and so any significant reduction in aggregate demand. But that's me as a monetary technical person. But indeed, we need to increase retail investing. If you look at the yield curve, it's not populated through the yield curve. There's a big dearth of liquidity in certain tenors. So, but how to do that? I know that for a fact that there's a financial stability forum where the Investment Insurance Commission, the Securities and Exchange Commission, and the Central Bank as well as the PDIC sit not only as talk shops but also to coordinate policies. Consumer protection is very big in their agenda, and so hopefully. With these reforms, you can broaden the capital base, the investor base, and also broaden more fundamentally the capital markets.
Bravo. Next question, please.
Yes. Good morning or good afternoon. I'm Non Cuervo. I've been in real estate, well, 3rd generation, property sector. I've been monitoring for 40 years. I'm much younger than Paco here. Now, my concern is this. You're talking about risks. And based on our analysis, the property sector has been driven by a huge amount of capital. However, it has reached a point where it's becoming too speculative. I'm in valuations, I've been doing appraisals, and I find some of these valuations really off the roof. I know the Banco Central is coming up with a price index. First question is, when can we have that? Because that would be a very good guide for us who are in the valuation industry to come up with something more, let's say, rational instead of subjective. Second, we are aware also about the supply of, let's just focus on condominium, the residential sector. The takeouts, the absorption rate for the past 3 years, it's much less than what has happened in the past. Now, I'm concerned about this because I agree with Paco. Capital has to be productive and less speculative. This is true in the urban centers. What has to be done is now go regional. You go out of Manila or what they call the central business districts, there's a huge need to expand. But there's also a lack of capital or big investments to come up with new cities. One of my advocacies precisely is to decentralize Manila, Metro Manila, and come up with new centers where prices of land, it's less speculative and affordable. So again, Banco Central has been monitoring this and a big help for us in our sector. I know you're in banking, but Dr. Ador, when I go to the website of Banco Central, I try to look for some, or BSP, for some of this data, but it's not yet available. When can we have that available to help us in the private, who are in the private sector or in the property? Thank you very much.
So we actually already exposed, we've presented this to the monetary board, and it's due, and it should be due for public dissemination anytime soon. As long, you know what's really keeping us is that, as you know, the Philippine Statistical Authority is still in the early age of formation, and so, but any statistical data, you have to course it through the, particularly if it's a new statistic, but that's technical, so we have to present it to the Philippine Statistical Agency. And once we present it, and once they've vetted it, then we can make it available for public domain. Hopefully, perhaps by the second or third quarter. But then, I hope that you won't be too over enthusiastic about it, because it's really, we hope that it will be a nationwide index. But given some difficulties in data gathering, it's actually, I think, only centered around the National Capital Region. But that's still an improvement compared to the data that we have, which only concentrates on the CBDs and also on certain segments of the property market. So, but we'll roll it out within the year, possibly mid part of the year. On capital, I think your question also has to do with capital raising activities to fund the property sector. Indeed, we see that the leverage of the property sector is still manageable. Part of the financing is coming from the banking system. Obviously, we're still a very bank-centric economy. But then we look at how strong bank lending to the property sector has been, and indeed it's showing some heady growth. But as I said, is there a structural and organic story behind it? And with respect to residential demand, I guess you would know better than me, but our thinking is that there is a structural story behind the strong residential demand. This is also true for property space, for office space, because you have that strong demand from the BPO industry. But increasingly, we're also seeing some shift of, in terms of financing, using bond instruments and using equity financing too. And that is also included in the asset watch, if you will, of the central bank, because we'd like to see how exposed the financial system is as a whole. But at the moment, we think that there's an organic story. It's a demand of a growing population with growing incomes. There's also, as seems to be you say that perhaps there's an increase in the demand for speculative residential space. We haven't seen much of that yet. I guess we can talk about this. We hope that it's more anecdotal than anything. We know that there are certain cultural changes going on. For example, people trying to save on traffic, on travel time, and also on travel costs. And so buying a second home so that they can be situated nearer to their residence or nearer to their office work or to their schools. You know, the parents are buying second low-price condominiums for their children. So then we look at how strong lending has been growing. Not only how strong it has been growing, but whether there's already some risk of increase in non-performing loans, and we haven't been seeing that yet. So I guess we will remain watchful and vigilant, but at the moment we think that the story remains to be largely structural in nature.
Very good. Very good answers. Please, question right here.
Yes, good afternoon. I'd like to address my question to Joey Ortega. My name is Jojo Claudio. I represent Holdings Corporation, company that owns and operates a chain of sports retail stores in the Philippines. And my question is, Joey, what sort of advice would you give family corporations? Because I was provoked with what you said earlier, that you have difficulties and the nuances of dealing with family corporations. What sort of advice would you give to family corporations? I represent a first generation. We're a family corporation, basically. And what sort of advice would you give a family corporation to take that bold leap to improve our business model and probably one way of tapping the capital market?
Actually, it's very good to remain single, right? Because you don't have trouble dealing with your girlfriend, with your wives. However, two heads are better than one. When you have a partner, especially a strategic partner who can help you with your business, grow your business not only locally, but also in ASEAN, then you'll be able to maximize your business and grow your business for the next generation. We just have to do this paradigm shift, that it's not all about a family. Sometimes we can welcome others, foreigners, the professionals into your family and treat them like family. And hopefully together you can make it a win-win for both the investing company and the investor.
Very good answer. Martin
Yeah,
Luchalco?
if I can add to that, even in the early 90s when venture capital and private equity started to flourish here, our first targets would really be family corporations. There was a very successful bake shop chain called Goldilocks. And, you know, one thing I noticed is that every domestic flight that I would take, someone would always have a Goldilocks cake to bring home. What does that tell you? There was merit to expand to regions that have not been served. A lot of these family corporations, the challenge is when the next generation go to school abroad, they become very westernized. They want to be an investment banker. They want to be like a Paco Sendejas. For that reason, I don't know why. So I think what I'm saying here is family corporations have to make that big leap. Hans here is our next stage. We fund private companies, family corporations. At the end of the day, my co-panelist here mentioned 2 books. And you said it was getting better. Why, is it no books now? So at some point, the leap to professionalize a family corporation has to have the buy-in of the family. At the end of the day, I mean, we're talking about governance. And if I can add something, Hans, the PE, what are we trading at today? About 15, and that's still, are we still pricey compared to our...
Still slightly above the...
Yeah, still slightly above, but I think what is sustaining that is the excellent earnings that are coming out. So I think the opportunity really in private equity, one thing we discovered is that private unlisted entities comprise 78% of the Philippine economy. In other words, 22% of that, revenue-wise, comprise what is listed. And that's why we feel family corporations and private companies at that, and private equity at that, certainly have a lot of opportunities. The industries that I had mentioned that we like, Fort Klein, it doesn't mean I'm an expert in those industries. The reason why we like those industries is because we feel these are the industries that are driving the growth of the Philippine economy. And Paco, again, Paco and Joey said as well earlier, one key ingredient to success, even in a family corporation, is do not be scared to hire outside professionals, people who can bring different skill sets, people who have worked abroad, people who want to come home. One of the guys, and I think that's one way of adding value. Private equity investors, when we invest in your family corporation, we don't just invest capital. It's the value add, it's the expertise that we may have had running a running a similar business, or having invested. I mean, one of the guys in the audience today is the founder of Beer Below Zero. So, made in the Philippines, Luigi Nunez.
Where is Luigi?
Right here. So, don't get me wrong. What I mean by value add, don't drink naman all the beer that he can, aside from the capital. No? It's the expertise on how you can bring a family corporation to the next stage, how you may possibly scale it to the region. So I think the point I'm making here, family corporations today, not conglomerates, but more of the emerging family companies, are still the targets of private equity. And hopefully, Hans, and I think Hans has not gotten the rounds of applause that he deserved, just given that for what he's done for the stock exchange. Because at the end of the day, it's easy to invest capital, especially if it's not yours. But the way to really make money is how do you exit? There are two ways of exiting. One is through a corporate acquisition and trade sale. But at the end of the day, if your family corporation has a shot at listing in the Philippine Stock Exchange, then let's keep close to Hans. So that's just my advice. I hope that helped.
Very good. Oh, Martin Pascual?
Yeah, I just wanted to, I have a few insights on this one. I come from a family corporation which was started in 1946, so it's pretty old. I am third generation. Pascual Laboratories is a second largest local pharmaceutical company in the Philippines. In terms of a family business, I think that is one of the single biggest challenges here in the Philippines in terms of investment, from a private equity perspective, as well as from the family perspective. We've had a lot of experience talking with private equity firms, with the PSC, with people, you know, who want to invest. In terms of professionalizing, right? If you want to deal with a family business or a family operation, you not only have to look at it from a financial perspective, from an investor perspective, but really from a family emotional perspective, right? So you need basically a psychiatrist or a mediator, really a mediator, to look at the different actors that are involved, from the second generation to the third generation to the founder patriarch. That is equally as important. If you don't understand that, then, I mean, the discussions will be fruitless. And it's also a long-term exercise in terms of you're not going to get a deal signed in the second or third meeting. It's really very much like a dating period, right? And so if you're a private equity firm, right, that's sort of the challenge, right? There's a lot of opportunity now in a lot of family business corporations that want to professionalize, that want to scale. But unless you understand that, you're going to have to talk with the tita, the tito, the lolo, the lola, right? The sort of ambitious kids that have come back. Then, you know, I cannot emphasize what a frustrating experience, but also very enriching experience, right? Because you're talking about businesses that care about the long-term success, that care about legacy. So personally, I think the only way you're really going to accelerate the professionalization is an external shock, right? So whether it's the objective of an IPO, inviting a strategic investor in, really expanding outside, that's the way that you're going to stimulate everyone involved. You're going to drag some people that will be screaming and fighting towards that. You're going to have some people that are very enthusiastic. But it's very hard to do it sort of internally unless you have catalysts, unless you have triggers, right? But in the end, that's where you're going to see really high returns, the 5x, 10x, 15x that private equity firms and investors are looking at. And right now, I think within the Philippine environment, you're getting a critical mass of family businesses that are getting
a lot more outside professionals that are really seeing the opportunities and expanding. But you have to, as Joey said, appreciate the cultural nuances that is a very distinct characteristic of family corporations.
Very good. Very motivational. So please, I know there's a lot of family businesses here, so please make sure that you ask your business cards. Please, next question down here.
Hi, good morning. Anybody in the panel can answer my question. And I'm Christina Olang, I'm with First Metro Investment. My question relates to the fact that the stock market continues to be dominated by the foreigners. An attendant to that is also the finding that I have in one of the research that I did, that the foreign stockbrokers virtually holds almost half of the total turnover of the Philippine stock market. In fact, there were a total of 5 local brokers who were previously among the top 10 in terms of turnover, but has been eased out now by the foreigners. And we only have 2 names among the top 10 in terms of the turnover. So do you find, Mr. Sicat, especially, do you find any issue with the fact that foreign brokers continue to dominate the local turnover? And do you think it's an issue that's better left to the market, or is there a way for PSE to make a more equitable distribution of the business? Thank you.
That's a tough question.
Well, obviously, as a market operator, we would like the market to determine the winners and losers. Now, what's interesting in that comment is to say that as there's a perhaps growth in liquidity in the marketplace, that we're finding more and more of the larger firms, and this happens to be, I guess, foreign in what you're saying, the larger firms dominating, let's say, average daily trading volumes and values. I think that actually goes to the fact that in the financial sector, there is such a thing as scalability and scale, and similar to what you find in the banking sector, wherein there's a move towards perhaps consolidation, i.e., Larger is probably better than smaller for various reasons, for risk management reasons, for the ability to service clients. So it's not necessarily bad that you have larger firms kind of dominate, you might say in a numerical sense, the top slots. Does that mean that you're crowding out smaller firms is a bad thing? Well, I would argue that small and medium firms always have niche plays to do so in any industry, the capital market included. And I would say that in the Philippine Stock Exchange, or at least the equities market, what we are trying to promote is something similar to what the Bangko Sentral is trying to promote in there, and wherein firms are better capitalized than they were previously. And of course, to the extent that they decide that their business model is to actually provide a wider range of products, then it's up to individual firms to figure out, are they going to play in that space, or are they going to remain niche players? So I would argue that it's not in the exchange's best interest to actually determine who should be winners or losers by nationality to start off with. I think it's in our best interest to ensure that the players in the market are those which are perhaps the most efficient, the better capitalized ones, and those who actually give the right service